Good day. So, what happened? The thing is, in July, the US imposed restrictions on the sale of advanced computer chips to China and enforced them. So China told the US, now that you won't sell me those chips, I won't sell you the rare elements like gallium, germanium, and others that I've been mining and producing. And the US responded, all right then, I'll put tariffs on those as well. China told the US, all right, for your ships that dock here, I'll charge more money. Costs went up for them. What happened? Up or down? Up and down, one side lowered it, the other side did. How? You go along with it. How can they do that? Well, the real issue is that we ended up paying for it out of our own pockets. The market anticipated that they were about to start a long-term economic war. The market saw this coming. We had the highest liquidity in crypto history. Something like $20 billion, $19 billion, you know. Can you imagine this in history? At a certain point, $8 or $9 billion change hands, get eaten up, something like that. It's almost unbelievable. At that time, the index would show something like $12 billion, $16 billion, just crazy numbers in history. Billions of dollars, unimaginable even at large and point mall. Where does it go? Find out. And then, history just keeps repeating itself over and over again, white. A lot of people are here, so let me share an interesting fact. Elon Musk lost $14 billion overnight. He woke up and $14 billion was gone from his net worth. Why did it drop so much? Because of the coins we have, there was a sudden crash, what we call a flash crash, which is a very rapid drop in a split second. Several things happen at once during these moments. Let me point out a few things so you don't regret it later. Generally, when someone says, I bought at $6.50 and had an order in, about 90% of the time they're lying. Because in a flash crash, you can't really place limit orders like that. In almost 80% of exchanges, you can't set such limit orders because you can't catch the pump and dump. Binance itself says you can't place such orders. There were some events where pump and dump happened, and Binance did this to reduce the impact. When a flash crash happens, limit orders usually don't get filled. The exchange tries to fill its own limit orders, tries to liquidate open positions, and most of the time can't even do that. We saw this with Luna, where they couldn't liquidate, and with FTX, where they couldn't liquidate either. I'm talking about all of them, including Binance. Binance, after the FTX crash, said, I'm not going to liquidate these short positions anymore because there's no money left to pay you profits. Even the orders placed at the bottom, the exchange itself fills them. So, when people say, I bought at the bottom, or I had an order at the bottom, in 99% of cases, nothing happens. Seriously, nothing happens. Or if you had a short position, you couldn't close it, not even with a limit order. Even if you set a limit buy, you couldn't buy. So, get this idea out of your head. If anyone tells you otherwise, don't listen. I'm telling you, 99% of the time, they're not telling the truth. Maybe 1% of the time, it works, but it's really rare. I wanted to mention this because I felt good about it. Among all the BitUnix communities, we had the fewest liquidations. It's really something to compare. It's not like we had a huge loss. Both in terms of numbers and ratios, we had the lowest amount of liquidations. So, thank you for listening to me. Don't just take my word for it. Think for yourself. Remember these sentences and don't get tired of this journey. For me, it's become more enjoyable. Now that I'm on YouTube, it's even more fun. Thanks to all of you. For those few who did get liquidated, let me say this, it's okay, because you were there at one point, too. Sometimes the price goes up, you get liquidated, and then the price keeps going up. That's just how it is. I mean, if I hadn't been liquidated, the profit I could have made would have been really significant. Just think about this point, guys. Sometimes it could have turned into $10,000. Keep this in mind. Okay, for example, imagine that 200 people each got liquidated for $10,000. And we're saying this because you yourself have seen and know exactly what I'm talking about. In summary, you can't blame anyone else. If it doesn't go your way, you get liquidated. There are thousands of dreams and thousands of if-onlys, like, if only I could have done something, or if only I had made a different decision back then. But these things just don't happen in real life. There's really no other way. After that, you can decide what to do next. Then, every time you sit down, think it through for yourself. I mean, even if you go to the market today, it doesn't really matter that much, because you've seen a big wound that you haven't healed. You have to stand up and heal that big wound yourself, one step at a time. This idea that you should keep going despite every wound you get is really hard to stick to. Eventually, the wound gets infected. Then your problems just get worse. Sometimes you have to step back a bit. Sometimes you need to distance yourself from the market for a while. Sometimes you have to step back a bit. Sometimes, don't let your worries get the best of you. Take a break and come back after a while, maybe after 122 days. If you don't, it'll just leave here and go to AT. I can't answer for these things. I can't make up for my own mistakes. It's really easy to get hurt. If you can't control your emotions right now, it's better to step away when you're at this level. Otherwise, you'll keep coming back and making the same mistakes. You should go and see what it's really about. If you don't, you'll repeat mistakes. When alone, you can answer honestly. I'd give example in your life. For instance, something smaller. If you want to become famous and rich in the city, if you want to, but with this kind of money, what money will you really make? It just doesn't happen for me. For me, it's like putting it out there without stopping. I set the bar high. And that's the real reason for it. Once you figure out the real reason, take some time for yourself. Work it out. Then make your decision again, whether you want to get back the financial world. That decision is really important, because your return to the financial world might come with different behaviors. If you go back to your old ways, you'll get the same old results. We're back here again. Right. Is it a place? It's tough. I'm a mess. I want it from you. I saw you in this crypto market. Why does it act like that? Why does it break support like that? It's the same for us in Forex too. There, the flow of money and leverage is even higher. We did the same thing here. Now everyone is to blame. They know, right? It passes, since everyone is to blame. And it comes down to realizing it's my fault. Stay away from the market. Don't just open positions for no reason. Sometimes, someone tells me they're always in the middle of the action, always trading, always involved. You open positions impulsively. He says it's cold here. He used to say that before. I'm just saying, buy and hold. Thank you all for your efforts. You were paying attention. You were following up. Everyone manages things in their own way. He didn't even say those sentences to anyone. Even happiness is hard to find here. It's serious. I really enjoyed it a lot. Let's check the chart. Our plan is here. Hide the banana. Our plan is set in this environment. Let him say it another way. We have two positions open, Bitcoin and Ethereum. Let's keep these. Our plan is that as long as the daily stays below the 190 level, if it closes there, we'll close that open Bitcoin position we have. If it closes there, okay, I'll even bring it up and set it right away. For Ethereum, if the daily closes below the 131 level, we'll close it. I can't even move it anywhere right now. Right now it's around 2,100. And what's the position we took on Ethereum? Right now, the daily is below the 100 level. If it closes, we want to take profit. It's pretty far away. Our liquidation point is really far from here. It hasn't even come close. Even if it goes up 10%, most likely it still won't get close. Even if it goes up 10%, we're still good, with nothing to worry about. We still have no reason to worry. And don't even say, hey man, I'm going to close the position. If you close the position, you'll lose the championship, and right now we're still holding onto our position. You shouldn't close your position just because of a 2% move. Again, I'm saying, there's a good chance that nothing will even happen here. There's a good chance that nothing will happen at all. If you don't have a tight stop loss, or maybe there isn't even a tight stop loss, so there's a chance nothing significant will happen. And if we're still holding our position and nothing has happened yet, if it drops below 1,000, you can just let it go entirely. We also have another position open somewhere else. For example, we have a position open on Solana. We made a profit and moved up, taking our profit from that. I switched to the daily chart. I don't trade this range or this pattern. I don't trade this range or this level here. But when this level breaks, we took a futures profit from this position, and now things have cooled off. The stop loss is set somewhere around 4, just to be safe. What else do we have open in another position? Ethereum, which I traded in this range. We also have a position open on Link. These are all under the same name, so that I can take profit from futures when that event happens in futures. We don't really need to set any special stop loss for this. It's not a big deal for me. I might say, let's say, it could happen. It could be good for you. We're talking about SHIB now. These are the ones we open in futures. With the profit we make at this level, for example, we set a tighter stop loss. So this reduces the risk for me. We can also set a very tight stop loss if we want. Profit this position. My position is open. I might do the same with Link. With this, we can stay safe from these things. In the market, it says to you. But if you keep your positions open just to reduce risk, it's not really that effective. You can't really make this move or do this action. If we close below the 46th candle, we can exit from it. Don't get involved, man. Back then, we were in a futures position, and it got liquidated. If we want to keep following up from here, it's just nonsense. We pretty much have nothing left. If we did, we would have been out already. Honestly, I don't remember. I think in the first 10, I was thinking about it, but now there's really nothing left. That raises a question, but honestly, even in the past, whether it was in spot or any other topic, what should we do with our time then? If we give it time, I think it'll work out. That's why I'm still following up on spot at these levels. I'm not saying this is it, but honestly, I'm just frustrated. I've been frustrated for a while now, without thinking that this is going to make a candle tonight. I just watched it happen. But honestly, I was just thinking about it. I was frustrated. It was stuck in my mind. I don't have any spot positions right now. The most important decision is what you want to do here. And I think it's the same for the rest of the guys too. If you close a position or don't, due to your reasons. If you have an idea. When I close, it's because the setup looks right or something's off. For example, sometimes this move looks like a fake out. What if you get stuck at 3.588? What if you get stuck afterward? If you get out here, what could be the reason for that? Did you take it here and then get stuck afterward too? So, if you don't do anything, you just get stuck and that's it. Or maybe you're just breaking even, or you didn't even get stuck at all, or you bought way up here and now you're just holding onto it, not doing anything with it, and you're wondering what to do next. This is what happens when you get stuck. Right? You're stuck at a high price. Your money's just sitting there, and you're hoping that one day it'll come back. They say, don't say hopefully, say God willing. But honestly, I won't do it anymore. I really won't. Just be aware of your position, know what you're holding, or at least don't do something just because someone else did and made a profit, because everyone has their own luck and perspective. Every word has its own meaning, and it doesn't always apply. That's that. By the way, if you want, I can post a position update for you guys on YouTube today. Tell you what positions I have, where I have them, at what price, since the day I bought them. Okay, I'll show you all of them. Look at the coins, check the charts. The most important thing, what do they say? The most important factor, the most important topic is whether the trend is bearish or not. You should also tell yourself, did we sell at the top? Did we crush it? Or are we in a bearish trend? You should see what the market is doing. If you're in a bearish trend, don't get caught up in FOMO. If you're in a bearish trend, yes, the trend has changed. Look, this candle is very sharp. It should be inside the box that we're talking about here. If it breaks the bottom of the box, it's like a distribution zone, and if it's bearish, it can show a reaction here. But look at the size of this candle, how big it is. The last drop was even bigger, right? The last drop was more than 95%. After that, we went up, then came back down, then went up again. This time, the drop was from 65 to 49, and then we went up. The last drop was bigger, so the last drop was much bigger. The difference is that this one was very sharp, fast, and sudden. The difference is, when it's very sharp, fast, and sudden, as a trader, you have to accept these things. No matter how much self-control you have, no matter how much ability you have, don't think that just because you're sitting in your temple from morning till night doing nothing, you have inner peace and no noise, and no one says anything to you, and you show off that you have inner peace. Don't think that way. When the market makes candles like this, we can't really make rational decisions. That fake pride that I have self-control, I can control my emotions, I can make the right decision, put that aside. When you're in a situation like this, it's better not to make any big decisions. If you had a plan before, if you had a scenario written out, like I said before, that you expected a drop, you had a scenario, but maybe not this big. But since you reached that number, you waited for the events to play out. Sometimes you have to wait a bit for the price to settle at a level. Let me bring it up. The price is at a certain level, around 108, which gives you time for the market's excitement to calm down. Again, I'm saying, Just because there are few red candles doesn't mean the trend has changed. My friend, it doesn't mean the trend has changed just because of one flash crash. You have to really see a trend change before you can say the bearish trend is over. Another point, just to remind you, I was saying after the crash, the shorts increase. What does that mean? After the crash is over, let me say it better. Right now, we're in Bitcoin. Bitcoin has dropped from the top. It's now at $124,000. We're in Bitcoin. When you talk about a crash, when I talk about a crash, we didn't have an alt season, we didn't have a bull run, and during the crash, we were present. That's what I wanted to say. After the crash, when the trend becomes fully bearish, you see more of these kinds of candles, and it gives more short positions. That's what I mean. Another point, I'm not upset that people are opening shorts here, or why people are opening shorts on AI coins. In the past, people would open short positions here, but not now. Why? Because it's not in my strategy. Exactly. The environment is different. Why aren't you counting on it? Orders aren't being executed there. Don't open random positions. Don't open random positions. Look, if you opened a short position here, the order would have been executed here. For example, if you opened a position here, the stop loss would have been here. The risk reward from here to here was about 12, maybe less, maybe 8, 7%. Don't stress yourself out. The risk reward was 12. Just a few days ago, we were talking about this. If you had opened a position here, the risk reward would have been from your stop loss. This is all about your setup and strategy. So, for your own area, whatever plan you have, it doesn't really matter. If your setup and strategy give you a signal, take it. If not, don't. God doesn't care about your area. Let's say that even that long position, which had less excitement, didn't give you FOMO and all that. Its profit was more than this drop that gave you FOMO. Just yesterday, in Bitcoin, I had a position that hit its stop loss here, a stop buy in this candle, and it hit its stop. That was important. I swear, that was important. Now, from this point on, I won't go below this level. The important thing is, if on the daily we close below this line, and if you make a simple mistake, what then? So if the candle closes below this level, you close your position. Then, if it triggers an entry above, it's simple. At 114, we have an entry trigger, and you can open a position again. Then, again, this level itself creates an entry trigger. After that, we have 120, then 124 as entry triggers. So I'm really not that worried about it. I'm not too concerned because the positions I've opened from below and the funding fee are enough. Up to this point, buyers were strong, pushing the price up. Everything was okay. Funding fee was positive. Buyers had strength. Now, we want to see what's next. If the funding fee drops, if it's low, it means buyers are tired. They don't want to pay the funding fee anymore. If they're tired, we open positions again. In this monthly candle, if it closes like this, what does it mean? Nothing. It doesn't give me any data. This monthly candle just tells me that, okay, you can trade inside this box. In this box that started here, you can open positions at the bottom, and at the top, you can open positions or sell. When we get a monthly candle like this, we call it a monthly candle. Maybe it's a reversal. That's the data it gives me. But 20 days from now, 10 days from now, it'll pass. In the weekly chart, nothing really changes. What happens? The important resistance on the weekly is 115. The important support is 107. These two don't have much effect. The main issue is that, because of the news and anticipation, maybe this happened. We got this candle. These two levels, up and down, are fine. Let them sit and talk, reach an agreement, and the selling pressure will go away. If they don't, it'll continue until things normalize for the market, until it becomes just another thing, like the Russia-Europe war became normal. The war's been going on for a while, but now it's just news. It's still happening, but it's normal for the market. This will become normal too. If they don't reach an agreement, it'll just become normal for the market. That's the situation here. Let me say, God forbid something happens. I'm afraid that, like 20 years from now, history will repeat itself, and at this same time, it'll be Pakistan, Afghanistan, Pakistan, India, China, Taiwan, China, US, North Korea, South Korea, Russia, Europe, let's say Europe, because Europe, Iran, Israel, and then US, Iran. It's really, really close for something to happen. If a spark goes off and this war happens, if it happens, what will happen? Risk assets will dump, no joke, they'll crash. What should we do? Write your scenarios, have a plan. I've said my plan. If the market gets really bad, I'll exit. I can't just talk about it logically when a daily candle is this big. I have to wait and see how the market reacts. I'm not opening any positions here. What position should I open? You say, look, the correction is over, open a position. If my strategy gives me a setup, I'll open a position. If it doesn't, I won't. I gave you an example, the one that my strategy gave a setup for, but I missed it, and I was upset about it. I even said in my analysis video, I'm still upset about it, because the risk reward was higher before this drop. Now, those who are following their strategy and risk reward, I totally get it. I know. I've seen it. For example, right now, below 110, for example, you wouldn't have a short position. Why would you? You really wouldn't. Not on your main account, not with high risk. If you're risking 20% just to open a position, that's not for your main account, not at all, not even for 10 days. For example, above this level, you wouldn't open a long position. If you see a green candle from here and it goes above 120, then be happy, be really happy. If that happens, the trend will definitely be bullish and you can easily open a long position. Be really happy if that happens. If it does, the dominance will drop, and we'll go up. We'll just say hi to it, and then what happens? We'll sell our alts. At that moment, really, people's checks are FOMO. In crypto, when dominance drops, and this level, this kind of candle forms, it's not a joke. The point is, if you want to open short positions, be careful where you do it. Don't open shorts on alts everywhere. Open on SOL, open on ETH if you want, but not everywhere. If dominance drops, that's what you do. If it continues to rise, what do we do at 69? Our ceiling is 62. 62 is our ceiling. Above that, my plan changes. The total market cap is ready, the bottom of the weekly box is set, and the daily pair is also set. Even in the weekly, this dual is important for me, and in the daily, it's important for me too. So what should we do? Let's see what happens Sunday. As I said, these things depend on Bitcoin. If there's a market shock, Bitcoin could give a strong short position. We could bet on that. If we get below 3.65 again, and you want to open a reshort position, be aware it's very risky. The market is still very open.